So there's 3 ways a loan officer can increase the amount of money they make on an annual basis. They can increase your leads. And then you can increase your lead conversion, then you can increase your loan size. So when you're sitting down and you're talking about goal setting, I'm gonna encourage anyone, especially a mortgage loan originator, to think about those 3 things. Just like I would encourage you to not try to eat the elephant in one big bite, right? Don't try to do all 3 at one time. Focus on one until you dominate it. Focus on, hey, I need to increase the number of leads. Okay, great. For the next 12 weeks, you need to get out there, probably complete the 12-week challenge, and you need to get belly to belly and face to face with more potential referral sources because you don't have enough referral sources that are hitched to your wagon. Once you've dominated that, maybe you start putting into place opportunities for you to increase your lead conversion. Look at your systems, look at your processes. What's that lead intake like? Are you doing it or is an assistant doing it? Are you doing it? Are you forcing someone to go to your website? Are you having a high trust conversation up front or are you not? Is your conversation better than the one that the consumer would have received if they called their bank or that online lender, or is it the same exact? If it's the same exact, then you need to change that. You need to do a better job up front of differentiating yourself, of building high trust with the consumer so that they're more tied into what you're going to do and what you're going to offer and why it's important they work with you. And then if you've already dominated those 2 things, now you need to start looking at, of your referral sources, which of them are referring you the clients that are bringing in the loan sizes that are going to help you increase your average loan size. Like, think about this. If you increase your average loan size by just 10%, let's say you're an average loan originator, you did 18 million last year. If you did 18 million last year, by the way, I would call you more than average. But let's say you did 18 million. Well, if you increased your average loan size by, and let's just say of your 18 million for giggles, your average loan size was $200,000, right? So if you did an average loan size of $200,000 and you increased the average loan size from 200 to 220, that means you probably closed somewhere in the ballpark of, let's see here, 70, 80, 90. You probably did about 90 transactions. Well, 90 transactions times 20,000 is what's 9 times 2 is 1.8 million. So you did another same units, but you did an extra 1.8 million in volume, which means you made probably an extra $20,000 by doing the same exact business, but just by increasing your average loan size. Right? So like those are things that loan officers need to be thinking about when they're doing their goal planning is, am I generating enough leads? If not, go fix it. Am I increasing, am I converting at a high enough ratio? If not, go fix it. And then am I fishing in the right ponds? If not, go fix it. Ideally do all 3. And then that's just working on what worked for you last year and just getting better at it. If you really want to take your business to the next level, now we start thinking about adding on one extra silo or one extra piece to the puzzle that you didn't have last year. Whether it was working with a home builder, working with CPAs, working with financial advisors, working with divorce attorneys, et cetera. Right.